Hello and welcome to the Fat Tail Investment Podcast. I'm Callum, Newman, and we're talking gold again today. Reason being, we're at an important junction in the market. We've had the big low into June. The ASX, the S&P 500 in the US, they've rallied back up. So the question is asked, is this a bear market rally, as in a bit of a suckers rally and it's going to go down again? Or is the market shrugging off all the things that drove it down and looking towards a new bull market or a period of rising prices? Well, nobody knows, of course. My inclination is to be a little bit on the bearish side, or to think that the rally is going to run out of puff. Let's think about what drove the market down. It was interest rates. They're still very uncertain around the world. Inflation, again, still an issue. And probably the biggest one for me is the ongoing war in Ukraine, which is pressuring the natural gas market around the world. So it's driving electricity prices in Europe sky high. And of course, it's sucking all the gas from the US towards Europe, which is driving up the US gas price. Obviously, energy is a very important input for a lot of businesses. So companies that start to see pressure on this front will lose their margins. We saw an example of that in Australia. Just let me think of the Adbury, which announced its results recently and got cut down on the day about 17%, I think. And part of the reason was the inflationary pressure on energy and labor. So you got to be watching for those kind of things in this market. So what we want to talk a little bit about gold, because if the market goes down from here, well, theoretically, gold could go for a run. But at the moment, it's not moving. Oh, hang on, my phone's ringing. Oh, excuse me a second. Oh, it's my Uncle Rex. Rexy, he's a trader himself. Rexy, I was just thinking about you before. Have you been trading the market, the rally since the June low?
I got my rocks off. Oh, how good is this?
Oh, wow. Sounds like you got a few good trades away. But I'm actually doing my podcast right now. If anyone was thinking of getting into the market, do you think the bull market can keep going, or should they be going defensive?
Well, thank you very much. Good afternoon to you.
Good afternoon to you too, Rexy. Oh, yeah. Oh, you're about to hit the water. Okay, mate. Well, we'll catch you later. Rexy, what a character. Anyway, so you can see Uncle Rexy's there is a little bit bearish on the market. As I said, I'm a little bit bearish. So, okay, well, if we're worried about the share market, what are some other asset classes that could be due for a run? Gold is one of them. Now, gold is a perennial candidate from those that really like it. They always throw it up. Doesn't always work. So over the years, I've become a bit jaded about gold in general, I guess, in that sense. But I do think that it's probably now, certainly in US dollar terms, undervalued relative to the expansion in the money supply. What we need to see is the futures market start to bid it up. Now, my colleague Vern Gowdy did an interview with a guy, a momentum technical analyst out of the US, made a very compelling case that gold would have a period of higher prices coming up. And hopefully we'll be talking to him in the next couple of weeks. But in the meantime, we've got John Feeney from Guardian Gold, just to talk a little bit about gold itself, and talking here physical bullion, the role it could play in a portfolio, what he's seeing to do with the gold market and the monetary system at the moment. So we'll get him on now. I hope you enjoy it. And don't forget, if you're listening, if you're enjoying this, click the like button, and you'll also see below the video a way to subscribe to my service, Australian Small Cap Investigator. But for the moment, here's John Feeney. All right, we're talking gold today, and we've got a man, John Feeney, on the line from Guardian Gold. Now, to set the scene, we're going to go back August 2020. Gold was booming. Obviously, the big we had at that time the COVID collapse, so there was a lot of nervous money around. Here in Australia, the Aussie gold miners were roaring up into what had been a big bull run. Can you, in your words, describe what you think's happened since, before we dig in to where it might go next?
Sure. So the way I see the gold market now is we're coming off a period of, a major sort of geopolitical event. So the Russian invasion of Ukraine is the most recent sort of, driver of gold demand in, say, this calendar year. So what we saw was a huge spike in, say, ETF inflows during the weeks or the days after the Russian invasion. So the price kind of peaked at that point as well. So you think about a lot of traders that trade everything under the sun would have thought, I'm going to buy gold, I'm going to buy oil, like during that time. But a lot of them now probably have been selling out of those ETF positions at a loss after, jumping in the panic. The market kind of consolidated at the peak there after it went a bit parabolic. And so now a lot of those kind of weaker hands, sort of short-term focused traders, have been exiting. So you've seen ETF flows turn from positive in March to negative in June, July, and as they're selling down out of those positions, along with the gold price. So you've seen, gold's obviously pulled back in that regard, despite the inflation numbers that are coming out, because I think a lot of that pent up additional demands now coming out of the market, and the way I see the market now is there's actually a much better time to be buying sort of around this period where sentiment's pretty low. Around gold, you've still got a lot of issues that central banks have to face moving forward. And you've also got a lot of that ETF, short-term demand that jumped in on the Russian invasion, geopolitical event is now played out, and a lot of them now exited the market. So yeah, that's a quick summary of how I see the gold price and the gold market today. Yeah.
If I had to take the devil's advocate position, there's a few people who will go, with inflation print so high, why hasn't gold done more?
Yeah, I think the market's in general in a bit of a state of thinking that inflation's still going to go away. Like, even though inflation stuck around and the Fed was obviously dead wrong on it being transitory, right? I think in general, market participants are still kind of out there buying stocks. They're still a little bit too optimistic about the future. And so you see, interest rates moving higher. You've seen the US dollar index move higher, and that's obviously impacted gold. And you've had bond yields moving higher, which is typically negative for gold. But I think the most important thing for investors to focus on is not like the nominal yield of bonds, but more the real yield. And so if inflation sticks around and it stays where it is and nothing gets resolved soon, I think eventually the gold market will react. But what we're seeing just in the recent period here is the massive inflows that went into gold on the Russian invasion. Like that short-term stuff has to come out of the market for it to find its feet and then to move higher again. So that's what I see. I see the markets come out, the short-term investors that were just punting, trying to make a short-term profit on Russia and Ukraine have now pulled out of the market. So now we've got like a foundation from here, I believe, where people will start to think, more about inflation, more about the challenge that central banks have. But the other thing is, why hasn't gold rallied when inflation numbers are so high? We haven't really seen too much chaos across, equity markets yet, have we? Like a bit of a pullback and a bit of a recovery, but nothing, that comes close to what we saw in the GFC. So until we see some significant equity market volatility, we might see gold, take a while to get back in the picture again. But yeah, I think gold will have its time, but it's just had a period here where you've had a few technical headwinds that have weighed on the price.
So let's just step back a bit. So we're talking physical bullion here, gold bullion. When people come to you, what do you tell them why they would want to hold this? Just put aside the events of today. I mean, it could be 2010, 15, 2020, 2025. Why do you advise people hold gold?
It's funny you ask that because we don't actually advise or provide financial advice.
Imagine that you did. I put it to say right, you don't give advice, but why should someone listen to this? Why do they even care about gold?
Yeah, so it's more like investors will come to us and they'll explain to us why they're thinking about buying gold. But in general, like the vast majority of physical gold and silver investors, they just want to preserve their wealth, right? So it's more about wealth preservation over the long term. They're not really speculating too much on the price, jumping up, $100 an ounce the next few weeks or whatever. They want to just, the way they see it is they want to just put aside, for the very long term, a physical asset that sits outside of the banking system that, is generally performs well in inflationary environments, So we've actually seen, like in the last 6 months, we've seen a huge amount of physical demand for both gold and silver. And even in the recent few months here, even though the ETF flows have gone negative, so the short-term gold and silver traders are kind of like selling down, what we've seen is our physical gold and silver sales are actually really robust in the last few months into this price weakness. So the physical investor kind of looks at the market and tries to buy as low as possible with a long-term time horizon, whereas like your short-term traders on ETFs will just like react to news.
And will those guys generally buy the coins, or they just go the bullion bars?
Vast majority just buying bars. So if you think about gold, physical gold, and you're comparing options, like the lowest cost way to buy physical gold is to buy like larger cast bars. So your cast bars, you know, the premium that you're paying above the gold price is only about 1% or thereabouts, and it goes up to about 1.5%. But with coins, it's a lot more. It could be like 2-3% above the market to buy like a gold coin. So the vast majority of investors that buy physical just stick to the lowest cost stuff, which is the physical bars. And it's counterintuitive. Most people think like when they see our vaults and, you know, how much security is involved and the size of the operation, they often think that the storage of gold is expensive, but it's actually quite cheap. It's only like $270 for a box that would hold 20 kilos of gold.
And do most people leave it with you, or do they take it back with them? Or is it just a mix?
We get a mix of people collecting, and then I'm not sure where they take it. We'll store it.
The backyard.
They dig a hole in the backyard and hope that they remember where it is. Or I'm not sure, but then yeah, about half the clients will store with us in a safe deposit box, store with us remotely. So they'll be based in, say, in Perth or based in Brisbane, and they're buying gold through us. We store it, stash it away into their safe deposit box. So they've got a specific box, and we take a photo of their holdings and send through inventory statements and stuff. So they can either come in and collect it, store it with us, and be the key holder, or we can hold the keys for them and they can be, you know, interstate or overseas even.
And do you find when you talk to these guys, are they generally well versed in monetary history and currency and the discussion around central banks? Like they're obviously knowledgeable about the overarching reason that people go to gold.
Generally speaking, a gold investor has a very big interest in economics and what's happening with central banks and just the overall financial system. So a lot of gold investors look at it and go, look at the financial landscape and say, you know, with fiat currencies, a lot of them are temporary. A lot of central banks are having like really significant issues with fiat currency and hyperinflation. So you've got like, you know, Argentina, recent ones like Zimbabwe. You know, any fiat currency can go to zero, right? Because it's just completely backed with, you know, government promises and hopes and prayers, really. So your average gold investor really understands money, whereas most people, like I remember having a chat with my dad about, you know, how money's created and that sort of thing, and he was like, really? Like I didn't realize, like, you know, when you go to get a loan at the bank, the money doesn't exist in the first place, but the money's created when the bank, you know, writes a loan, things like that. So the average gold investor knows a lot more about money and how it works, how it's created and economics than, say, other investors that are just getting into stocks and so forth. So it usually takes a while for someone to get into gold, and there's not a lot of mainstream coverage of gold in the media like there is with shares and so forth.
And gold's always got its little buddy silver. Is the demand there the same, or does it sell more or less, or it's 50-50? Or
yeah, so with I guess with most physical bullion dealers, they might have about 70% of their sales go through gold and about 30% into silver, something like that. Might actually be less in terms of silver. What we find here at Guardian Vaults and Guardian Gold, we have you know, the largest private vaults in the country. So 2 in Melbourne and 1 in Sydney. And we find our silver sales make up about 35 to 40% of our gold sales. As a percentage of our total sales. So we actually get quite a lot of silver investors just given the amount of storage space we have here, because our largest safes go up to 1,000 kilograms. So, you know, we cater to people that are buying, you know, millions of dollars worth of silver and want to store it physically. So we'd probably have more silver sales than the typical bullion dealer as a mix. But yeah, silver's, I guess, just a leverage play on gold. It's going to move quicker than gold. It tends to move in the same direction most of the time, has a strong correlation. Smaller market takes less dollar value to move. So people buying silver are bullish on gold, but think silver has, has more upside, basically. That's what they're thinking.
And you personally, you mentioned that you've invested in gold equities in the past earlier to me. Do you follow technical indicators of gold? I just was looking at my software package here, and there's an indicator called a COPOC indicator, which it's been around a long time. I was just looking at it, and it was like you could argue that it's making a signal towards gold. You personally, is there a particular way that you look at the gold market, or you're just happy to hold it come what may?
In terms of technical stuff, like I prefer like the really, really simple technical analysis that basically tells you when the market's overbought or oversold. And I like to look at it on a long-term basis. So one of my favorite ones is just looking at a weekly chart of gold, for example, with the Williams percent indicator, which is like a stochastics indicator that tells you how oversold the market is or how overbought it is on a weekly scale. And a weekly scale is more of a long-term sort of look at the market. But that generally coincides with most major lows in gold. So that's one that I personally like to use. Like even if I'm buying physical, I like to wait to see that where the market's in an oversold weekly position, and then I'll just gradually buy a bit here and there during those times, and I'll avoid the times where the market's heavily overbought, because what that does is it takes emotion out of it. So when everyone's jumping on board buying gold because of Ukraine, the market was significantly overbought at that time, right? So like if all you did was look at a chart, you'd go, all right, I'm not touching it. Whereas like your emotions are telling you, shit, I've got to jump in right now, you know. So that's one thing I use. Another one is just following the ETF inflows and net inflows or outflows to get a gauge on what like retail sentiment is like, because you kind of want to do the opposite. Like when ETFs inflows are through the roof and everyone's jumping over each other to buy, I'd try to avoid those spots when buying, say, either gold miners or gold or silver. And I'll look for the times where, ETF outflows are as bad as they look. I like times in the media where, like, the media's hyper bearish on gold. Those sorts of periods in time are the ones that I really like, where it's just.
And you generally playing off the US market, so the US futures and US ETFs, or are you looking at what's happening here in Australia too?
Yeah, sentiment-wise, I usually look at the US gold price more than the Aussie one. But I guess from buying, when I'm buying physical metals, I tend to look at the Australian dollar gold price more than anything, because the Aussie dollar movement's quite important as well. And that'll indicate when the market's heavily oversold. If you get a really, really big jump in the Aussie dollar or something like that, it'll push the prices down for us. So, so I watch both pretty closely. But I've been watching gold and silver, every day as part of my job, almost for the last 9 years, like all day, every day. So, I kind of get a decent feel for the market.
What brought you to the gold market in the first place?
I think I got interested let me think what year it was. My interest in gold in general kind of started when, shortly after the global financial crisis. So I was studying business and economics at uni. And at the time, the global financial, like everything that I learned basically throughout high school, because I was doing high school economics and everything, everything I learned in economics kind of fell apart during the global financial crisis. And it really annoyed me that like the vast majority of people, or vast majority of economists, like I remember reading a New York Times post where it was like 90-something% of economists, failed to see the global financial crisis coming. And I found that like incredibly bizarre and interesting, right? Because like, how do you have a profession where like 90% of them are wrong? That's
completely useless, yes.
Yeah, like at such a major event. And so then I started looking at like, okay, so who are the economists that got it right? And then finding a few of them and just commentators in the US that got the global financial crisis right? It's like, who are these people? And then looking into that, a lot of those sorts of people also talk about gold or have gold positions because they're kind of skeptical. They don't follow the mainstream narrative. They also kind of led me to gold as an asset class. And gold is kind of underrepresented across mainstream finance. Like I remember if you do your diploma in financial planning, for example, like gold gets like 2 sentences, right? So you kind of got to look beyond the mainstream to get into gold. And I think the first ounce of gold I bought was in 2013. And it was around, I think it was around $1,400 an ounce or something. So the way I thought of gold is like just like a really long-term stable currency that's been around for thousands of years. And I don't expect to get super rich from owning gold. It's more that I expect to preserve my wealth and do a lot better than having the money in cash. So yeah, that's how I got into it. And yeah.
And you mentioned gold equities there. I mean, in terms of where the Aussie gold shares are at the moment, are you just following along and watching as things develop?
Yeah, I mean, I do own some gold equities still. I started buying them around the same price, around the same time. I think around 2015 or something. 2014, I started buying some of the Aussie gold miners. I don't really own any overseas ones, just Australian ones. But the reason I liked gold mining equities originally was just due to how much cash they were, earning relative to the stock price. So it was more like it wasn't so much being bullish on gold. It was more like a valuation point of view. Like I remember looking at gold miners in 2015 and thinking, look, a lot of these are trading at 5 or 6 times free cash flow. Got good management teams. Some of them didn't. It was more like a value play. So look, obviously, if gold goes higher, the miners just earn a lot more, much larger profits. So I think if you look at the gold mining equities right now, a lot of people that are buying them are probably just looking for a leverage play on gold because, of course, if the gold price rises, the mining equities will go up.
Theoretically.
Yeah, theoretically. Well, on average, it has a significant impact. Like if the gold price goes up 10%, it'll have more than a 10% increase on the average profit of a gold miner, right? Because the margins are, make it so. So, but now I still own gold miners. I haven't really bought into any again, but it's probably time that I take a good look at them again because a lot of them have come down off the recent highs by quite a bit.
Absolutely. All right, let's just I'm thinking of the current market. Thinking QT we hear a lot about, so the Fed tightening the balance sheet. Do you think that's a headwind for gold or it's not an issue, or maybe it is, maybe it isn't?
Yeah, I think so most people have opinion like QT or like tightening by central banks, therefore bad for gold, right? Or increasing interest rates is bad for gold. Like you hear a lot of that. But I think it's important to look, if you want to look at the last period where inflation was at the levels that we see today, like that's the 1970s period, right? So I think like 1972 to 1982 from memory, could be wrong here, but I think it was around that time or those years, that decade. The gold price went up something like 400%. And that was during a time where interest rates went from, I think they went from 5% to 15% or something, right? So like interest rates tripled. So you had huge monetary tightening. You had, massive increases in interest rates. You had huge increases in bond yields. But still gold managed to, rise substantially during that period. And it's hard to find like another example where right now where like you've got inflation through the roof, you've got central banks only kind of thing that they can do is tighten monetary policy or increase rates in order to combat it. But that's, it hasn't happened yet, but it's surely going to have a huge impact on the global economy, surely going to lead to, significant recessions globally. Equity markets have surely got to have a very difficult time ahead of them under this period. I think gold can rise regardless of what interest rates are doing. Interest rates could go up and gold could double still. Just depends on what sort of, equity market volatility you see in the meantime and how much panic that generates and so forth.
And the US dollar, of course.
and the US and what the US dollar does as well. Yeah. So so as a gold investor, I'm not really concerned about higher rates. It's like more about like, the real interest rates in the economy, and that's, factoring in inflation. Because if inflation continues at a really high level, then obviously the real rates are really low or negative, right? So
I know. I remember the last peak in gold when it was 2011, I think it was 1900 in US kind of thing. So gold has sort of not done much over the last, in US dollar terms, the last 10 years, but it's hard not to think it's undervalued relative to what's happened since. So I personally think it's really interesting in the next 12 months, mainly because, as you say, the difficulties in the world economy are sort of throwing up all sorts of problems for shares. So just watching the Aussie market recently, there's all sorts of cost pressures and downgrades, and it's not an easy place to be. So if we do get a bit more turmoil there, I do think gold will catch a bid. So it'll be interesting to see how it plays out. All right, so I'm told that you do regular updates on the gold market. It's true. If people are interested, how can they keep following you?
So Guardian Gold on the website there, they can follow the market updates page. I've actually got one that's coming out probably Monday. Should get posted up there, which is just covering the recent sort of moves in gold and silver. If you wanted to subscribe to, receive those via email, it's just a free service. We've got a free account that you can set up on Guardian Gold if you want to follow us and keep updated. So so it's just Guardian Gold. You'd find it just Googling Guardian Gold and market updates from there.
All right, beauty. Well, I'll sign up and we'll see what happens. And hopefully we can touch base maybe in 3 or 6 months and we'll see what's going on in the markets then. I'm pretty sure it's going to go either one way or the other, and I'm fairly sure it's up, but we'll find out. So we'll touch base again in 6 months.
Perfect. Okay. Thanks for having me.
Pleasure.